Okay, students, so thank you very much for joining the session. So if you can hear my voice, students, can I quickly get a Y in the chat box, please? If my voice is audible from your side, can I quickly get a Y in the chat box? Thank you. Thank you very much, students. Thank you very much. Okay, so mock number 2, students, we can start working on this. So ready, students, shall I start working? Can I get a Y in the chat box? If you are ready, please. Thank you. Thank you very much, students. So now, students, we need to learn from the questions only. So you have the textbooks, you must start revising as well. So please, can you provide a guidance on how lease should be accounted in the financial statement of Trade Cushy, which is 40%. So students get the understanding of this very, very well. They are specifically asking you how the lease should be accounted in the financial statements of Trade Cushy. I believe, students, if you see lease, can someone tell me what is the accounting standards for lease? Students, is it possible for you to tell me what is accounting standard for lease? Any guesses at least? It's actually IFRS 16. Students, you must refer the LMS portal as well. So Oleg Scragg has sent you the following mail. We have acquired a new machine for the production process lasting. Can you remember, students, there is a production posting called lasting. On a lease term, please be kind enough to refer the table in the reference material that has been given. We need the following to be concluded. Now, students, what we will do question by question since we are learning it for today. So get this understanding very clearly, students. Oleg Scragg has sent you the following mail and he has given you the guidance on how the lease should be accounted in the financial statements. So students, I'll write down here mock number 2 answer. So can we start working on this? Yes, we can start working on this, students. Students, don't worry about this. It's generally a matter of application only. So if you observe here, students, 1, 2, 3 parts are there. 1, 2, 3 are there. So let's do all 3 today. So students, table number 1, they have given about lease. The lasting machine. The machine will be leased for a period of 5 years, beginning from 1st January 2022. Now, just see when is our financial statements, our financial year end. If you observe, it's on 30th June. Observe it very carefully, students. Our company financial statement is which year, students? 30th June. So we prepare it on 30th June. And when was the transaction taken place? 1st January 2022. So if you see 1st January 2022 till 30th June, how many months, students? If you do not mind, can you tell me? 1st January till 30th June, because our financial year end is 30th June. Students, I am waiting for your response here. So 6 months, thank you very much, students. So this is the presence of mind. So as a finance officer, if you do not know the year end, you are making a mistake. Now, sometimes in the examination, the students tends to write the full year accounting treatment. So I will write down here, students, common mistake. So students get this understanding very clearly, common mistake. Some students write for full year, and they forget that they are the finance, the finance officer, they are the finance officer of I can write down here Trade Cushy. They are the finance officer of Trade Cushy. Students, get this application very clearly here, students. Any questions you have, you can ask me, students. If you are fine with that, can I quickly put a Y in the chat box? Therefore, the application should be for a period of how many months, students? 6 months only. There can be dates anytime, students. You can't memorize the dates, but just remember one thing, you need to be very careful with this. The useful life of the asset is expected to be 6 years. There will be 5 equal lease payment, K dollars 200,000. Effective interest rate is 5%. Expenses of totaling 4,000 has been incurred before obtaining the lease. Okay, so students, first thing, let's write down here, students, initial recognition. So they are asking how we can record this in the financial statements. So in order to make the answer even more convenient for you, I'll mention here as initial recognition. Students, if you are fine with this, can I quickly get a Y in the chat box? Initial recognition. Initial recognition means for the first time when you're recording it in the financial statements. So I will write down here, students, in accordance with IFRS 16, in accordance with IFRS 16 lease, in accordance with IFRS 16 lease, the right to use the asset, the right to use the asset, the right to use the asset. Right to use the asset means, students, when you are leasing a property, you don't own it, but you have the right to use it. Right to use the asset. The right to use the asset needs to be calculated, needs to be what, students? Calculated. This is generally the present value. This is generally the present value, the present value, the present value, the present value. This is generally the present value of cash payments, the present value of cash payments. In simple language, five equal installment, that is K dollars 200,000 at 5%, at 5% discount rate may give you the present value. Students, present value. Students, you may be knowing present value. Can I quickly get a Y in the chat box, students? You would have studied that in investment appraisal, project appraisal, BA2. So this should give you something called the present value, students. Thank you very much here, students. Thank you very much for your point of view and the answer. Excellent. So students, what I will do is I will continue this even more better. So I will write down here further, the cost that is incurred, at the beginning, before the lease, needs to be accounted, needs to be what, students? Needs to be accounted as a capital expenditure, since it is before the usage, So students, the next thing I just want to write down, also the machine should be initially recorded as non-current asset, and also we need to make sure that the lease liability amount should be also recorded in the statement of financial position, So this is not relevant, but I will write it for you. Debit right to use the asset, and students, what I will do is I will credit the non-current liability. So students, if you observe, you are generally getting the asset. You get what I'm saying, students. And also, if you see, you did not pay money, because lease you won't pay today. You will take long time to pay, students. So get this point of view very clearly. This is the basic understanding for you. So students, before moving forward, any questions you like to share, you can let me know. If you are fine with this, students, can I quickly get a Y in the chat box, students? If you are fine with this, can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much, students. Now, students, after the lease initial recognition, we need to go to the subsequent recognition. So I will write down here, students, subsequent recognition. Subsequent recognition. So what I will write down for you to be more precise and clear is I'll write down even more better. In accordance with IFRS 16, in accordance with IFRS 16, in accordance with IFRS 16 lease, we need to understand that the subsequent recognition, needs to have the elements of the following, that is the asset component, which we say as right to use the asset, because we if you say right to use the machine, actually, so I'll write down here right to use the machine, right to use the machine, right to use the machine needs to be depreciated on a straight line basis, depreciated on a straight line basis, over the estimated lease period, lease period. So get the understanding of this very clearly, students. Get the understanding of this very clearly here. So students, if you are fine with that, can I quickly get a Y in the chat box, students? If you are fine with that, can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much, students. Okay, so students, now coming to the next section, that is the lease liability. The lease liability should be adjusted as per IFRS 16 lease liability schedule. Now, in the suggested answers, they are not referring anything, but I will just guide it to you so that it will be very clear for you, students. So in this lease liability, we have the following type: year opening balance, effective interest, lease paid, closing balance. So I'll work it down for you. Year opening balance. Then we have something called the effective interest, if I'm not mistaken, effective interest. Then the lease paid, because you need to pay money, right, students? And then you have the closing balance. So students, let's start working on this. It's not so difficult. It's very simple. So I will write down here, students. Now, just for your understanding, year one, we take the opening balance, students. So I will put here K dollars. So if you see the lease liability, we need to take it and we need to multiply it by the effective interest rate of 5%. And the lease paid, every year we are paying a lease of how much, students? 200,000. And this will give you the closing balance, students. So opening balance is the present value of this 5 equal payment, that is 200, 200, 200 into discount. So the closing balance, now example, this is for year one. Students, just I'm doing as a hypothesis. You need not, you can refer it, but just get the understanding, students. So it's going to be year two. So similarly, it will continue in this aspect, students. It will continue in this aspect. So students, any questions you do have, you can ask me, students. If you are fine with this, can I quickly get a Y in the chat box, students? If you are fine with this, can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much, students. So I believe this is very easier and very clearer for you. So what I will do next is, students, after going into the subsequent measurement, let's come to the next one, students. The next one we are going to focus is derecognition. So coming into the derecognition, students, it's very simple. So I'll write down here, students. Generally, the leased asset is derecognized when the lease term is over, the lease term is over, the lease term is over, there can be a possibility, there can be a possibility the company acquiring the asset, the company acquiring the asset. There can be a possibility the company acquiring asset, or there can be a possibility, there can be a possibility the asset could be taken back. The asset could be taken back. The asset could be taken back. Could be taken back. Because students in lease, what's happening is students, you can generally take the asset fully, or else students, there are situations you can take it back as well. So this is the basic understanding here, students. Any questions you have, you can ask me. And I just want to write one more thing. This was also there in the suggested answer. Generally, short life assets are not treated as lease, are not treated as lease, are not treated as lease, are not treated as lease. This is very important, students. Short life asset we generally do not teach as lease. Yes, there is a possibility of leasing it again, but the problem is, if you see the estimated useful life is 6 years. So there can be a secondary period as well. So I'll write down here. That's a good point. There can be a secondary period, as well, where the company is able to lease it for the balance 1 year, for lease it for the balance 1 year, lease it for the balance 1 year. I believe this is giving you a better understanding at the moment, students. So any questions you have, you can ask me, students. If you are fine with the students, can I quickly get a Y in the chat box, students? If you are fine with this, can I quickly get a Y in the chat box? So students, this is the answer that you need to generally write down, because if you see, students, this answer what we have written is a very technically strong answer, students. Being very frank here, students, the answer what we have written here is a very much technically strong answer for your understanding, and this is an F2 section, students. Now yesterday what we did, it was purely P2. Now you see, students, it's a little bit of F2 area as well. So again, I told you all these questions we are taking out from past papers, and you can always read the past papers, students. It's there in the online portal as well. So students, before moving forward, any questions you have, you can ask me. If you are clear with all the explanation what I have mentioned here, students, you can please put a Y in the chat box so that we can move forward with the next one as well. We can move forward with the next one as well. So thank you very much, students. 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 So what we will do now is I will move on to the next one. So before moving into the next one, students, let's go for a break, students. So I'll give you a 5 to 7 minutes break, and then we can continuously do this question as well. Thank you, students.
यार एक पेन दे दे यार। यार मैंने यार वो वाला नहीं उठाया यार, पहले सर ये और करके चले गए, मैं ऊपर करने की कहने की भूल गया उनसे। ओए एक पेन दे दे यार। ये दुकान में मेरे पे साथ के साथ। हाँ यार, यही तो दिक्कत होती है, समझ लो या तो उसमें यहाँ पे लिख दो उसमें दीक्षा का
Okay, students, I'm back to the class. Can I quickly get a Y in the chat box if you can hear my voice, please? Thank you very much. Thank you very much. Thank you very much. Thank you very much. Thank you. Thank you. Now, students, the second one is a different one. Second one is a completely different one. So let's start going through that as well, students. Second one is a completely a different one. So prepare, the production team has referred the forecast profit or loss that has been prepared by the manager in both the parts using absorption costing technique and marginal costing technique. Now you need to know absorption costing, you take the fixed cost into consideration. But in marginal costing, fixed costs are treated as a periodic cost. The production team is a bit confused of both the systems and they need you to send some guidance. So here they are specifically clear on the difference between the marginal costing and the difference between the absorption costing. And they need you to send the guidance as well. So please can you respond on the following? Why does marginal costing and absorption costing show a different balance in profit? Okay. Does marginal costing always show a higher profit range? That is another question. What is the benefit of using absorption costing method technique? So there are three major headings that they itself has given for you. Now students, when you come to management case study, you need to design the content. But if you see how they have done it for you, very easy, no students. They have clearly broken it down. So students, now for the time you have, you need to start using the notes. What is there? And also students, whatever the doubts arising, please use the WhatsApp group or direct message me. I will definitely respond to that. So my first question is marginal costing. So shall we write down here, students? Marginal costing and absorption costing and absorption costing showing different profit, showing different profit. So that is the first question that everyone needs to understand. Marginal costing and absorption costing showing different ranges of profit. Now, let's go to the last one later, but let's go through this one, students. So here you have a table. So the first one is absorption costing and then marginal costing. So students, I believe you can see here, this is absorption costing, and then they have given you marginal costing, the same calculation as well. So students, number of batches produced, number of items sold. And here if you see students, number of batches produced and number of items sold. Now, if you observe here students, you are selling more than what you are producing. So the inventory is reducing. Again, I am repeating it students. Here you are selling more than what you are producing. Get the point of view. Because here you produce 4,000 and you are selling 4,100. So you will have taken from the inventory. And here you produce 4,200 and you are selling 4,400. So you would have taken it from the inventory, the balance. So can we write down a small understanding here? Things to observe, because whatever said and done, we need to have a very strong observation skill. In this case, the inventory valuation is reducing. The inventory value, so the inventories are reducing. Sorry, the inventories are reducing. In this situation, the inventories are reducing. Students get that point of view very clearly, students. Therefore, we need to be specific. We need to be specific on the impact to the cost of sales, impact to the cost of sales. Students, if you do not mind, can you tell me, students, cost of sales, how do we calculate it? Opening inventory, right, students? Opening inventory, you take out, then what, students? Then we have the purchases, opening inventory plus purchases. Then we have something called minus closing inventory, opening inventory plus purchases minus the closing inventory. So this will give you something called cost of sales. So students, I believe this is very clear for you here. So if you do not mind, can you just take a note of this and you can put Y in the chat box, Because students, marginal absorption costing has a relationship with the cost of sales, because students inventories are valued at full cost and marginal cost. So that is the basic understanding there, students. Thank you very much, students. Thank you very much, students. Okay. Now students, coming into the application now, let's start going into the application. So let's see here, students. Now, if you see opening stocks 1,800, production cost and the closing inventory. So if you see closing inventories are reducing, you can observe it. It's effectively reducing. And students, if you see in the absorption costing, it's 917 here, 980. Here it's 1052, and if you see here, it's 1044. But get the understanding of this very clearly, students. Whatever said and done, students, if you see clearly that the marginal costing. So I made a mistake, I think, students. I think this should be more. So just get the understanding very clearly, students. The marginal costing accounts to the fixed cost as a period cost. So what I will do is I will just color this with a blue color pen. Now see, students, if you see fixed production overhead, what I'm seeing here is always treated as a period cost. But in this case, students, you don't see any fixed cost. You see sales, cost of sales. Agree? Then directly gross profit. But here, instead of gross profit, they have contribution. You get what I'm saying? They have contribution. Get the point of view very clearly, students. They have contribution. But here, students, what they have directly a gross profit of 970. Okay. So here they do not have contribution. They are just having something called under or over absorption. They are having something called under or over absorption. They are having something called under or over absorption. So students, if you do not mind, can you get this point of view very clearly, students? Can you get this point of view very clearly? This is the basic understanding here, students. This is the basic understanding here. Are you clear with what I am mentioning here, students? Are you getting the application of this correctly? Because get this point of view as much as clear as possible. So this is the basic understanding here, students. This is the basic understanding here. Thank you very much, students. Thank you very much, students. Get the point of view very clearly. So students, costing showing different profit. So first thing we will start writing, students, a note. Marginal costing generally treats the fixed production overhead as a period cost. As what cost, students? As a period cost. Therefore, the marginal cost only consists of variable production overhead. Only consists of variable production overhead. That means you do not have fixed production overhead, variant production overhead, and direct cost, because this is the basic understanding here, students. Students, are you clear with that, students? Yes or no? Any questions you have, can you let me know, students? But are you clear with this point of view, students? Yes or no? So they do not take the full cost, they only take the marginal costing only. So students, I will continue with the next sentence. In contrast, when you observe the absorption costing, it is generally having the full cost, where the fixed production cost, is generally added to the profit, is generally added to the cost, using the overhead absorption rate, Now students, I will just write down here, OAR equals budgeted overhead divided by budgeted activity level, activity level. Students, are you getting that understanding properly? So this is the application, students. Budgeted overhead divided by budgeted activity level, students. I believe this is very clear for you here. So students, I believe this is very clear for you here. So students, if you do not mind, can I continue with the next sentence as well? So I'll write down here, therefore, the marginal costing will generally value inventory at a lower cost, generally at a lower cost. Get that understanding clearly, students. Generally at a lower cost, which means, students, which means in the point where the inventories, the closing inventories, are increasing. The cost of sales, will be will be will be having a lower value because 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 of the inventory change, students. Just a minute. So if you see, the inventories are generally recorded at a lower rate. You get that point there. Now example, fixed cost is not there. So if you come to here, opening inventory plus budget. Now closing inventory, if it is a lower amount, students, okay, students, when the closing inventory is low, what will happen, students? The cost of sales will be high. No, students, because example, let's assume opening inventory is 1,000, purchases is 500, and closing inventory, let's make it as 400. So in that case, in this hypothetical example, 1,000, 500, 400. Get this point of view, students. 1,000, 500, 400. In this case, the cost of sales will effectively result in 1,100, right? If I'm not mistaken. So similarly, let's assume the same thing is taking place. Same thing is 1,000, and let's make it here as 500, same numbers. But let's assume, students, the closing inventory at the moment is 100. So when the closing inventory goes down, what's going to happen? The cost of sales here is going to rise up, right, students, if I'm not mistaken, because you have sold more. So in that case, when the cost of sales is high, in this case, when the cost of sales is going high, okay, when the inventories are reducing, the cost of sales may go high. So when the cost of sales goes high, students, the gross profit may generally reduce. That is the basic understanding. But if you go with marginal costing, what's going to happen is, students, if you go with marginal costing, the closing inventory will become even lower, if I'm not mistaken, when the inventory goes down. So effectively, students, what will happen? The cost of sales will be generally high. So in that case, what's effectively going to make sure is, students, it will reduce the gross profit. So similarly, students, if you see in a case of inventory increasing, then students, what's going to happen? A marginal amount only will go up in the cost of sales. So the profit will generally be little higher there, students. So that is the understanding in that point of view. Don't worry, students, you can get this sorted when we do this application as well. So students, what we will do now is, because lower value of the inventory. So which means in the point where the closing inventories are increasing, the cost of sales will have a lower value because of the inventory, because that is the understanding point of view here, students, because of that inventory valuation. This will marginally increase the gross profit, similarly, when the closing inventories reduce, when the closing inventory reduce, the cost of sales, will increase. The cost of sales will increase, students. Get that point of view. The cost of sales will be increase, which will reduce the gross profit, students. Get that point of view very clearly there, students. I believe that application is very clearly understood by you all, because that is very important for you to get that understanding clearly. So students, that inventory valuation plays a major role. Now, if you go to absorption costing, students, the inventories are valued at high. So in the case when the inventories are going down, in absorption costing, the profit will be even more. Now, students, if you observe here, the closing stocks are 1,780. Now, in that case, you see here, students, the gross profit is very high in this case. But you see here, the gross profit or the profit is comparatively lower when you compare with this one, if you observe. So that is the basic understanding, students. Marginal costing will always exclude the fixed cost element. So that is the basic understanding there. So any questions you have, you can ask me, students. If you need any further clarification, please do let me know, students. If you need any further clarification, you can let me know. If you are fine with that, students, we can move on with the next one as well. If you are fine with that, we can move on with the next one as well. Any questions you have, you can ask me. If you are fine with that, can I quickly get a Y in the chat box, students? Please go through these valuations, very, very important. Thank you, students. Thank you very much. Thank you very much. So the marginal absorption first area is done. So the question was, why does it have a different thing? One is it ignores the fixed component, and the other one is the inventory valuation gets affected. Does marginal costing always show a higher profit range? So that is the second question. So I'll write down here, does marginal costing shows always shows a higher profit range, always shows a higher profit range. So that is the point of view at the moment. So students, if you are fine with that, what I am going to do is I am going to guide you with the explanation of this. It's not so complicated, students. It's very easier and simple method of doing this. So if you do not mind, students, can I quickly get a Y in the chat box, students? Shall we start working on this? Does marginal costing always shows a higher figure? That is the question there. So coming here, actually, it all depends on the closing stocks. Generally, when the closing stocks go down, when the closing stock goes down, goes down, the marginal costing will generally have even a lower cost of sales, Get that point of view very clearly, students. Get that point of view very clearly, because in this the inventories are increasing. So that's what, if you see students, again, see inventories. So that's the point of view. So in that case, so lower cost of sales, where the gross profit can be higher. So get that understanding very carefully. Therefore, we need to make sure that the inventory increase or decrease, may generally decide the valuation of inventory, and the gross profit, and there is a tendency that the marginal costing will always not be the highest profit, will always not show the highest profit rate, not show the highest profit range, and the absorption costing can replace it during the phase where the inventory increases, where the inventory increases. So it's vice versa. So students, any questions you have, you can ask me, students. Anyway, you get this understanding very clearly. If you have any questions, you can put it in the chat box or you can ask to me, but get this understanding clearly as much as possible. The inventory valuation generally plays a major role, students. Because observe it, when the inventory reduces, students, marginal costing will even go lower, students. That's the basic understanding. So the cost of sales will increase. When the cost of sales increases, the profit will reduce. But students, when the inventory level increases, then marginal costing will generally be the, I can say, the highest one. So that is the understanding there. So students, coming to the last one in this section, we have one more question. The benefits of using absorption costing. So students, I'll write down here the benefits of using absorption costing, and I will write down within bracket another term for that is the full costing. So children, if you are ready with this, can I quickly get a Y in the chat box so that we can move forward with the explanation element as well. Thank you very much, students. Thank you very much. Thank you very much. So the benefits of using full absorption costing. The first one is, I can say here, adheres to the matching concept, So I will write down here, students. Now, if you see, there is an accounting standard called matching concept. Matching concept means income should be matched and cancelled with the revenue, with the cost that are incurred to generate that income. So I'll write down here the matching concept. So I'll write down here the matching concept generally considers how a company can generally calculate calculate the profit on a realistic manner. Get this point of view as much as possible, students. Matching concept generally considers how a company can generally calculate a realistic profit on a realistic manner. Therefore, so I will continue there. Therefore, we need to understand. Therefore, we need to understand that the absorption costing is the most suitable technique where the company will be able to provide a better clarity on the usage of periodic cost. So students, this is the basic understanding of one thing. The second thing is, students, provides a detailed picture. So if you do not mind, students, let's start working on this application. It's not so difficult. It's very critically important that you are clear with that. Provides a detailed picture. So I'll write down here, generally, the company will get a detailed picture. Generally, a company will get a detailed picture on the calculations of the overheads, where the product will be priced in a realistic manner, and further the prudence can be applied. The prudence concept 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 can be applied, where the company will be able to understand a better break-even analysis, where the decision making will become better. The decision making will become better. Students get this understanding very clearly at the moment. Any questions you have, you can ask me, students. If you are fine with this, can I quickly get a Y in the chat box, students? If you are fine with this, can I quickly get a Y in the chat box, students? Thank you very much, students. Thank you very much, students. Any questions you have, you can ask me, students. Any questions you have, you can ask me. So I will just want to take 1 minute. So let's do a small illustration. This is not relevant for this question, students. Small illustration. So let's calculate, let's do small thing. One is the wool and the other one is the wood shoe. So let's make a small table like thing. Let's calculate and see wool and the wood shoe, and let's see how it works out, students. So I will just make it out for you. So details. So one is the wool casual, and the other one is the wood casual, wood casual. So students, if you observe here, direct material, let's make it 10, let's make it 10. Okay, basically almost like the same. Then I'll put here direct labor. Now I'll make it again 5 and 5, just my understanding. Then direct expense, okay, direct expense. So again, students, what I will do, I'll make it 5 and 5, and then students, I'll write down here variable production overhead, that's going to be 5 and 5. And then students, I will write down here a fixed production overhead. Now I will mention that only for this product, but for this it is nil, because for wood we are going with marginal costing. So students, the total cost what is going to be incurred for this product range is going to give you an answer of 30, and for this one it's going to give you an answer of 25. So students, do you observe there is a small inventory valuation issue, students? So students, let's come into a situation, increase in inventory by 100, increase in inventory by 100 units. So students, if you observe the absorption costing will have 500, that is 5 into 100, that is $500 more. And if you see marginal costing, what will happen, students? 5 into 100, which will be $500 less. You get the point there, students? Yes or no? So in that case study of when the valuations are less, now if you see in this case, now in the situation, the inventory increase, when the inventory increased by 100 units, students, you need to get the understanding very clearly. What's going to happen? Absorption costing will have a very high level of closing stock. So closing stock will be high. Closing stock will be generally high. Agree, no, students, for this one? So what's going to happen? Cost of sales, the closing cost of sales will be less. Comparatively, it will be less. So gross profit will be high during a situation like this. The inventory increases. But in a situation where inventory has increased, the closing stock will be less compared with what, students? Compared with the previous one. So the cost of sales, okay, the cost of sales will be little higher actually, and the gross profit will be marginally lower when the inventory increases, students. So are you getting that understanding clearly, students? Is that clear? If it is clear for you, can I quickly get a Y in the chat box, students? If it is clear for you, can I quickly get a Y in the chat box, students? If it is clear for you, can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much. So students, this is the application. So before we go into the throughput accounting and the benefits of that, what we can do is, students, we can go for a 5 minutes break. Thank you very much, students. Students, I'm back to the class. Can I quickly get a Y in the chat box, students? Students, I'm back to the class. Can I quickly get a Y in the chat box? Thank you very much, students. Thank you very much. So students, now shall we move on to the next one as well? So the principles of throughput accounting and the potential benefit. So I will underline the term here, throughput accounting, okay, and the potential benefit as well. So students, again, look at this carefully, students. This is one of the most easiest case study exams because 80% is knowledge. So students, for the time you have, I want you to go through the knowledge as much as possible and refresh yourself. Anytime I'm there for you. So please remember that, students. Okay, now coming here, management is very much interested in the learning of new systems of throughput accounting. Please, can you respond on the following? The principle of throughput accounting and potential benefits. So students, what we will do is, let's start working on this properly. So students, it's not so complicated. It is very simple. So the first thing I will write down here is throughput accounting, throughput accounting, throughput accounting. So students, it's very simple and very easy. So let's start working on this, students, throughput accounting. Shall we work on this? Yes, let's work on this. In throughput accounting, 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 we generally calculate the selling price and the difference between, sorry, we generally calculate the difference between between the selling price, between the selling price and the direct material cost, direct material cost, direct material cost. So I'll write down here, students, it's very simple. Throughput equals selling price minus direct material cost, selling price minus direct material cost. So students, any questions you have, you can ask me, students. If it is fine for you, can you put a Y in the chat box, students? If it is fine for you, can you please put a Y in the chat box, students? If it is fine for you, can you please put a Y in the chat box? Thank you very much. So students, I'll write down here, this is generally taken into consideration, taken into consideration in situations of a limiting factor, Generally, we can decide what production mix we can generally deploy, what production mix we can generally deploy, what production mix we can generally deploy. And also we can also estimate the management strategy of utilizing the resources, in more efficient manner, utilizing the resources in more efficient manner. And also this technique can help us to build the expected quantities to meet seasonal demand, to meet seasonal demand, to meet seasonal demand, to meet seasonal demand, to meet seasonal demand. Students, are you clear with this explanation, students? I just summarized it for your understanding. So students, generally you must go through the suggested answers. I'm taking from the past papers. So I just want to have a feedback session, students. So what I will ask is, students, you can tell your feedbacks to Deepansh or your class leader, and he can share it with me. Again, students, we are a business here. We are not a school teacher relationship. We are running a business here. So whatever the consumers, whatever the employees, all they want, we need to accept it. So students, I prefer doing questions every day is more productive. And you can go through the theories. What do you think, students? Yes or no? Whatever you prefer, you can let me know. But I generally feel doing questions will give you the writing skills, everything. Every day we can do questions, students. And any theoretical questions you need, you let me know. I will guide you as well. So you can tell it to your team leaders, and your team leaders can share it in the WhatsApp group, what you want actually, students. Let's be very transparent, and we are matured teachers as well, and you are also matured students as well. So let's work as a team, students, and let's complete this paper successfully. So students, thank you very much for your time for today. So I will meet you up with mock number 3 tomorrow as well, students. So you can leave for today, students. Have a wonderful evening. Stay safe. Go safe to your home as well, students. Thanks a lot, students. Thank you, students. Any doubts you can have, you can ask me as well. But if you're okay, you can leave, students. Thanks a lot, students.